Welcome back to another video. I'm your host Giancarlo and this is Investing with Giancarlo. Today I'm going to show you another live trade, and that's right, you guessed it, we're shorting FCEL. So a little bit of pre-market information. The market was rallying, FCEL was rallying about 7 or 8%, I think maybe 9% even, and the entire EV market was rallying. Now, a little bit of news on FCEL. Their end of quarter results are coming out next week, so there's a bit of hype surrounding that as well. So the likes of Plug Power, which is closely related to FCEL, it was both up, and FCEL, as I mentioned, is up. The Dow Jones also was rallying, as you can see in this short here. So all in all, the market was looking bullish at the market open. However, my thesis going into this is I think it was getting 7, 8, 9 or maybe even plus 10%, but it was looking overbought. Basically, you'll see when it opens up at the beginning. And so whatever goes up must go down, especially when something is overbought, and that was my thesis. So I'm thinking it's overbought, I'm going to wait for it to hit resistance and then I'm going to short it. Now we're going to get into the trade and show you that, but the bigger trade definitely would have been to go long. There was a lot more percentage gain in that in the end. However, of course, we don't know this. It could have easily also dropped like a rock to the bottom. So it's always the mentality always has to be get in, get out. It doesn't matter what happens after that. So without further ado, let's get straight into it. So as you can see, it's up 10%, so quite overbought. So I'm waiting for some kind of resistance and then I'm going to jump in. Normally now I'm getting more used to it, and I like to enter at about the second, third or fourth candle, because there's a lot of ups and downs, changes of direction when it comes to these trades. So you get a lot more clarity in the second, third and fourth candle. So hitting a little bit of resistance, but this could be just a bit of taking profit before carrying on. So the trend definitely at the beginning is up, but now you can see we're up like 11.3%. so I'm thinking this is way overbought. I'm waiting for that short opportunity. As you can see, I've got my 2% ready, so when I need to calculate my stop loss, I can just pop that in straight away. Now here again, there's a lot of trickery going on with these trades. So although 17 is a round number, I want to wait longer. So this is the third candle now. So I want to wait until my perfect opportunity to enter. Let's speed this up just a little bit. So you can see it's slowly starting to run out of steam. Now I still want to wait a little bit longer. I think it's going to test 17, the round number. When it breaks 17, then I'm in. But as you can see, tested as support perfectly. So now it's carrying on to the next point. So I'm still waiting, and now at this point, let me just pause it quickly. At this point, I'm thinking, okay, it's up 13.3%. Surely, it's not even surely, it's gonna have to turn around at some point for people to take profits. People are gonna, at this point, are gonna start feeling a bit fearful, thinking the market's gonna go against them. So once we reach this point, which I think is about now, I'm ready to enter my short. There you go. I've entered my short. Again, at this point, there's no such thing as 100%, but at this point I'm thinking, okay, it's overbought now. It's way overbought. It has to correct for it to carry on going up if that's what it wants to do. So that's where I've entered my trade, and this is the fifth candle. Now what I'm looking for, of course, is for it to break below $17. At this point, I'm still confident that it's going to turn around. Not 100%, I'll be very honest with you. I was still thinking, okay, maybe I'm going to have to take that loss. But again, it's gone up so much that it has to correct at some point. It can't just keep going up, 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 up. It has to correct, give back a few percent, and then carry on going up if that's what it wants to do. And so you can start seeing that. Now, you're gonna see here it's gonna start turning around, and this is where it could, see, this is that massive wick right here is a lot of buying pressure pushing it back up. At this point, you know, I could have taken profit here and just called it a day, because it could turn around at this point and just carry on going up, and then that would have been it. But I wanted to wait a little bit longer. I still thought it hadn't corrected enough just yet. I still thought that it needs to give back some more. So you can see my fingers on the trigger, thinking, okay, should I take that loss or not? But now I'm thinking, okay, it's starting to turn around, starting to round over, and I'm, you know, becoming more confident. But I'll be very honest with you, and this is why I'm still an amateur trader, and I'm working towards becoming a consistent, emotionless trader. I still feel anxious as it's going against me, because that's because of a lot of belief built over time, thinking that I have to be right. And trading is not about being right, it's about just being consistent and having an edge and letting that edge play out over time. So now at this point I'm thinking, okay, this is most likely going to go down. It just needs to break past that $17 barrier, and then it'll be getting closer to that take profit level. So you can see there's a lot of support at $17, which is the big round number. Once it breaks that support level, it's going to give much more to the downside. Now again, just to talk through in terms of psychology, this is why trading is not easy, because it is difficult to really just like keep your hands off the mouse every time you see green, every time you see it go against you. It takes time to really build that emotional strength, that fortitude, that you can just handle these kind of movements. So it's just about broken support, and now it's gonna, and there was some more support at this wick, but once it breaks past there, it's gonna give back some more to myself. So there you go. I ended up taking profit there. One thing, so I decided to take profit just before my take profit, because you can see it was turning around a little bit, and although I really wanted to allow the take profit to, you know, for the order to activate on its own, I decided to do it myself. I wasn't really happy about it, but at the same time, as you can see, it literally turned around at that point and started to reverse. I was lucky in that instance. And this is another thing, you know, as they say, you never go broke taking profit. Even if it gets to 1.5% or 1%, if you think, you know what, actually I'm not feeling that confident about this, take that profit. And that's what I'm gonna practice going forward. I think taking profit can be difficult, because you never want to leave money on the table. You know, if you take profit and it carries on going further in your direction, you'll be quite angry. So it was a nice profit today, nice, just short of 2%. But what happened after this is, because it was, you know, in this instance the market was very bullish, this was exactly the bottom, and then it turned around and rallied all the way to about $18. But that is, as I say, none of my business. I've taken my 2%, that's all that matters. Yes, if I had gone long on this, I would have got more than 2%, but it's all about being consistent and taking profit. I don't care what happens after that. So that'll be all for this video. Hope you got some value from that, and hopefully you're joining me on my journey to becoming a consistent winning trader. So see you in the next one. Peace.